Hello dear traders, I'm Anna Kasatkina. Welcome to Insta TV Economic News channel. The current state of the Japanese economy points to a number of substantial improvements, promising a gradual recovery from the recession. The industrial production report from Japan, which turned out to be quite positive, was the center of attention on Monday. Another crucial gauge of the country's economic health, the retail sales data, came in above expectations, bringing more good news to participants of financial markets. The Ministry of Commerce and Industry reported that the volume of Japan's industrial production increased by 1.4% in October compared to the previous month, which saw a 1.1% gain. The industrial sectors that contributed to this improvement include transport equipment, general machinery and electronic components. However, the data fell short of expectations as economies had projected a greater rise by 1.9%. Nevertheless, these figures also gave investors hope that the Japanese economy will take an upturn very soon. As for Japan's retail sales, the indicator climbed by 1.8% year-over-year, beating the forecast of a 0.8% growth. Therefore, the retail sales report reflected a rebound from the previous unrevised figure of -0.2%. This uptick came as a result of better sales of clothes, food and drink, as well as cars and home appliances. The recently published data added to expectations that the Japanese economy is returning to the recovery path following the recession period, when it posted a contraction over 2 consecutive quarters. These recovery projections, however, failed to produce any significant effect on the exchange rate of the national currency. The Japanese yen lost ground against other major currencies on Friday and is trading flat in the new trading week. After the downbeat report on household spending and the weak consumer price index released on Friday, the dollar-yen pair edged down to 122.68. On Monday, the pair remained broadly unchanged, hovering near 122.82. The Japanese currency remains under pressure from its U.S. counterpart, which is still trading at its peak of 100.13. The greenback owes its strength to the growing expectations for the Fed's initial rate hike, which is likely to occur in December. Another important policy move is expected from the European Central Bank. The European regulator may change its monetary stance at the meeting in December, as well as the U.S. Federal Reserve. The policy divergence between the ECB and the Fed will deepen even more as the European Central Bank intends to introduce additional monetary easing and may also cut its interest rates. This was Daily Financial News on Insta TV. Stay tuned.